Well, Amazon reporting first quarter earnings after the markets close on Thursday. But our next guest says there will be less focus on the first quarter results and more on the longer term outlook given those headwinds from tariffs. From where we're bringing in Arun Sundaram, Senior Equity Research Analyst at CFRA Research. Arun, it's good to see you. Before we get to the big earnings picture, I do want to ask you about some of those headlines today. The reporting that we were going to see the sort of tariff breakdown in some of Amazon's pricing, then Amazon saying, no, we're not necessarily going to do that, but the White House pushing back. I mean, what do you think is sort of the right way for Amazon and some other companies to sort of approach this?
Yeah, it's certainly an interesting day for Amazon. I think in my view, I think the whole thing kind of got blown out of proportion because of that unconfirmed report that came out. Then the White House came out with their statement, and Amazon had to quickly respond back to it. I don't think Amazon was ever considering breaking out tariff surcharges on their main e-commerce website. They did say that too, and they said that these tariff surcharges were mainly for Amazon Haul, which is essentially their Temu, Shein copycat website, but. I don't think big box retailers in general will break out tariff surcharges. One is because it's just a very complex calculation, and it could be really messy. I think it's probably going to have more questions than answers if they did break out tariff surcharges, like why is this product have a higher tax versus this one? Right now retailers are also trying to figure out who's going to absorb some of these tariff costs. Some of it is going to no doubt be passed on to the consumer, but some of it's going to be absorbed by retailers. Some of it's going to be absorbed by suppliers. So how is that going to be calculated into the tariff surcharge calculation? So, I think it would be too messy. It would probably hurt sales, to be honest, if they did break it out too. So, I don't think you'll see big box retailers, take that route.
So I'm just curious, Arun, because it is the big question for Amazon, or certainly a big question. How exactly, Arun, they're going to navigate this China tariff exposure. I did see the team over at Roth. They're telling their clients more than 30% of products sold on Amazon could be coming from China. And so I'm just curious, what will be Amazon's game plan? And what is going to be Amazon's strategy to navigate that?
Yeah. I mean, no doubt they have a significant portion of Chinese third-party sellers. They never disclose it, their exact percentage, but it is expected to be a sizable portion. The good thing is that I think, ever since the first trade war back in 2018, 2019, they did move a significant portion of their sourcing or supplier base out of China into other Asian markets like, Vietnam, Cambodia, Thailand, India, places like that. I think that's going to be beneficial too. Over the last 5 years or so, Amazon's also diversified their business in terms of not just selling discretionary, bigger ticket items, but also more, daily use consumables. Things like deodorant, toothpaste, paper towels, things like that. Those products typically face less tariff risk as well. So that's going to help them, I think, as well. And third, Amazon has a very large business, many different suppliers. They also, 60% of their e-commerce business is also third-party sellers, and only 40% is their own first-party sales. So in theory, that's 60%, which is the third-party business. Amazon generates a fee based off of fulfillment services and things like that. So in theory, higher prices from third-party sales could generate higher fee revenue for Amazon. So I think there's a lot of pros and cons you have to weigh out before you determine whether tariffs are going to be fully bad or fully good. So it's a little bit complicated. I think it's the best way to say it.
Yeah, I mean, I guess unless from the third-party seller front, unless people buy less stuff because it's more expensive. I mean, and that goes for AWS as well. I want to ask about the implications there because, if Amazon's clients, if its big enterprise clients are feeling the pinch from tariffs, are they then going to not spend as much on AWS? Is that portion of their spending, is that vulnerable in this case?
Yeah. So the way we kind of framed it is that tariffs probably have a bigger risk to Amazon's e-commerce business, but a broader macro slowdown because of tariffs could have a negative implications to Amazon's AWS business as well as its advertising business. So that's something that we're gonna we'll likely look to hear on the earnings call in a few days, but. Yeah, we'll have to see. I think right now the commentary that we've been hearing from Andy Jassy and even Amazon's shareholder letter that they released a few weeks ago sounded pretty upbeat in AWS. So I think expectations are high for AWS this year. Amazon's also investing. They're expected to invest in over $100 billion in capex this year. Most of that is going to be in AWS and AI investments. So we are pretty upbeat for AWS, but because of that CapEx investments, there's a chance that AWS margins this year could be softer than the previous year. And I don't know if that's fully baked into the consensus estimates right now. So that could be, an area where we could see downside risk is that AWS margin line.
Arun, finally, what about the advertising business? Do you think Amazon's able to gain advertising share?
Yeah, because if during an economic slowdown, you want to allocate more of your advertising dollars to where people buy, goods. And right now, there's I think only 3 retailers gaining the most amount of market share. It's Amazon, it's Walmart, and it's Costco. And so if you're an advertiser, you probably want to be advertising in one of those three companies. But at the same time, is that many of Amazon's advertisers are third-party sellers. So if a lot of these Chinese third-party sellers are feeling the brunt of tariffs, then they could be advertising less, and that could negatively impact Amazon's advertising business. But at the same time, also is that Amazon's also just getting into Prime Video ads. They launched Prime Video ads last year. They're ramping it up this year, and that's increment. That could be an incremental revenue stream for Amazon. So again, there's pluses and minuses in their ad business as well. And advertising is probably the most profitable business at Amazon, even more profitable than AWS. And over the last few years, that's been the fastest growing business for Amazon is advertising. So hopefully that continues to grow at a faster pace, because that would only help overall margins at Amazon.